And welcome out to Trade Masters, presented by Tackle Trading, where two coaches, Coach Matt and myself, Coach Frank, bring a couple of trade ideas, bounce around with one another and the team as we kind of beef up our mid-week watch list. As always, thank you for joining us. If you're new around here, welcome. Always invite you to hit that subscribe button, like it if you like it, share it with a friend. You know all of those fun YouTube things. We certainly do appreciate that. And if you're not yet a pro member, there is never a better day than today to take advantage of that free 15-day trial. You'll find that in the description below. Come over and check out the best trading community out there. You'll have not just access to the best people, best traders that you'll find, but a world-class newsletter that'll always have you dialed in for the market each and every week, a new clean tradable watch list through the traders report, awesome education throughout the week in the coaches show, conversations live on Discord in our traders lounge. Best place to be, bar none, Maddie. You can always come and try for free. And let me tell you, you can't beat free. You'll find that in the description below. Before we dive into our watch list candidates here, Maddie, kind of a big day with it being Fed Day today. So I think the team would probably just like a quick overview of your thoughts post-Fed, and then we'll talk about the fun stuff.
Yeah, the fun stuff is certainly the trading, less so the central bank here today. But it's always important to understand the environment we're dealing with, and more than anything, I'll have a deep up. I'll have a more of a bigger update tomorrow in the Traders Lounge, and I'll obviously have some thoughts both in the from a technical perspective in the newsletter, and then obviously what the Fed did here today. But I think anybody in general, I mean, we're obviously dealing with a central bank who lowered the interest rate by 0.25 here today. And anybody that listened to Jay Powell in the press conference or looked at the dot plot, looked at the SCP, not going to go through those in detail here today in Trade Masters, but I would say anybody who read those things here today or is aware of what transpired here today from a dot plot, SCP, and a policy statement perspective probably not too surprised if they read the newsletter 4 weeks ago when I laid out this exact same thing 4 weeks ago. I said the Fed's going to start lowering the interest rate. They're going to lower it specifically to lower just to alleviate the restrictive territory, which is about a total of 1 basis point. They got the first cut out of the way. They're going to line up another cut in October. They're going to line up another cut in December. And that's what we know as of right now from a path to policy perspective. 26 is going to be a vastly different year in monetary policy than 25 has been. And I think we saw a little bit of that with Stephen Marin's dot plot expectation, which was quite outlandish. Here's everybody at 425, 375. That's where everybody is, right? 18 voting members are between 3.6 and 4.25 from a monetary policy perspective. Stephen Marin's like, no, let's go negative 19. Let's just get it out of the way here.
Let's do it.
And so I think we know kind of what's in store for the market next year on the path to policy. But as of right now, that's what we know. We know we're going to get one more cut, most likely two more cuts, but kind of the base kind of plan right now is 1 to 2 cuts going into the rest of the year, alleviate the rest of the restrictive territory. And I'll just say this, and again, I'll have a lot more detailed thoughts tomorrow on it, but I'll just say this as of right this very second. I don't think Jay Powell knows what to do from a monetary policy perspective. And part of my base case is the simple reality that I don't believe anybody at the central bank knows exactly what to do in when they're faced with stagflationary analysis. And that's exactly what we're faced with right now. Rising inflation versus lowering labor market is stagflation analysis. And we shouldn't try to paint it in any other way. You know, I heard a lot of criticism today. Coach Mark calls me up immediately after the Fed's like, "Oh, what's your thoughts on Jay Powell? What's your thoughts on Jay Powell? Why was his energy so bad?" And I'm like, I've been seeing everybody talk about Jay Powell's energy today. Like all of you guys are specialists on behavioral analysis. But let me ask you guys a question. How would you paint stagflation? How would you answer the questions on stagflation?
Yeah.
You can't exactly come across as a cheerleader when you're talking about the risk of rising inflation in the face of lowering economic values, and you have to cut to stave off the lower economic values while you risk further inflation. Like paint that as sexy, Frankie. Like
That's a tough
somebody
ask.
paint that one as, oh my goodness, let's giddy up and go, go, go. And so I wasn't too surprised by the overall, landscape of the central bank here today. I think what was very interesting was watching the technicals play out earlier today in the session, and I think that's important to understand the technical landscape here. It takes a little bit of time for the market to digest the information coming into Fed Day, especially when you're talking about the complication of rising inflation versus lowering versus rising versus rising unemployment rate. And so there was a lot of chop in the market here today. It was extremely sensitive on price. One thing that's always important in these environments, take it out to the daily chart to get the context of that really,
Yeah.
really aggressive doji in the market here today. The intraday was volatile though, and there's a level I want you to keep your eye on because we're starting to get the intraday cleaned up here, and that's part of the process of when volatility comes into the market. You want to let that volatility subside, and you're starting to see that cleaned up. And I'll say, Frankie, the two levels that I'm really kind of looking at here on the ES is you saw this level right here, kind of the 75, 76 level on the ES. You saw it get drilled in earlier today during the cash open. And then that level got pierced on the release of the actual policy statement. But then it got, during the entire volatility, it got dialed in. Like
Yeah,
every
just a
time, just
brick
boom, boom,
wall.
boom. Two clean wicks right there against 75. So for the pajama traders tonight who are watching Trade Masters, just realize we're anchoring on the 75 handle. Let's see what we can giddy up and get going later on tonight, specifically when the Japanese market comes online here in a couple hours from now. And so keep that level on mind. And with that said, guys, I'll have a little bit more of a detailed update for the pros in the Traders Lounge here tomorrow. I'll put my totality of my thoughts, obviously, in the newsletter. But as of right now, let's talk some trades.
Yeah, absolutely. Well, appreciate the breakdown, my friend. Looking forward to hearing you tomorrow and in the newsletter. But let's talk some trades here. Both of us have a couple of pretty aggressive names here, I would say.
A little bit.
And then, not conservative names for our other selections,
If
but
you're looking for Coach Greg's picks, they're not here today.
no, there's no staples here today. So let's start with our aggressive names here,
The
and
ultra aggressive names.
the real aggressive
Yeah.
type of situations, because I think both of them are fairly aggressive. I'm a gentleman. Would you like to go first? You want me to go first? I'll let you
I
choose.
think I think you went first last week.
I don't
I
remember.
can't remember. I'll go first
All
since
right,
you were
let's do it.
such a beautiful gentleman there. I'll go first.
Appreciate it. Yeah, well,
You
it's a good
know,
look.
Frankie, I think and again, I think as you come out of Fed Day, tomorrow's going to be, in my opinion, even a more important technical day.
Yeah,
Tomorrow, I don't find the day of the Fed releasing data to be an amazing technical experience. I kind of feel that gets a little bit more consistent on the overnight action of Fed Day, and then I do think Thursday becomes an important day as well. With that said, I kind of felt like the go or don't situation on HIMS deserved a little bit of a conversation here today. HIMS is obviously a healthcare stock, but they're also one of the most ultra aggressive
they're also
stocks in
hymns.
the market in general.
Yes,
I wouldn't exactly give it the categorization of a defensive sector
this ain't Pfizer.
here. No, when people think they're going to take over the entire healthcare regime, they're a little bit more aggressive than that. But what I like about it here, Frankie, is the setup here is kind of pure here from a momentum perspective, and it's not for the faint of heart. So if you like your good old cover call on your good old boring staples, I'm not judging that. I'm just saying HIMS isn't for you most likely, because this bad boy has a tendency to move. But even though this bad boy has a tendency to move, Frankie, it didn't move that much here today. and it
No.
actually got cleaned up in my estimation. When you look at the totality of data here, you got to like the bounce off the 200-day moving average to really kind of start this trend. And obviously, we're not dealing with a bunch of beautiful uptrends here on the intermediate trend here, but you got a trend in the short term here. You got an official higher level of resistance right north of the 55 handle, and then you got a flag-based pattern down to the 50 handle. Now, 50 is a significant whole number. That's going to act a little bit as a support level, but you're really kissing up against that 90 MA and that 50 SMA right there as well. And so when you look at this type of retracement, and I taught Master Trader this week here, Frankie, when you look at that type of retracement, you actually call that a Goldilocks retracement. It's a standardized bullish retracement where you run up 10 points, you give up 3 to 4 to 5 points. You run up 100 points, you give up 38 to 50 points, right? You give up 38 to 50% of the previous upward movement in price. That's a real good bullish retracement. And what you want to see when those retracements start to turn around is you want to see that slowing momentum candle. So when you're looking at the identification of a pivot in the market, there's a 3 candle type of dance here. You got your big candle, which comes into some heat, that comes into your support level. That would be this candle. It's known as the preceding candle. The second candle in the development of a pivot is a slowing momentum narrow body candle that will alleviate some of the pressure from the previous candle. That's what we got here today. And then the third candle that you want to really kind of see play out here, Frankie, is you want to see that upward movement in price that gives you the dose of confirmation. Now, with 38% pullback here, Frankie, you could be aggressive on confirmation, meaning you could be aggressive in getting in above the high of the day. You could wait on confirmation with the close of on the candle. That's kind of dealer's choice here. I kind of like the aggressive style here, Frankie, of getting in when it goes above 51. I'll explain that here in a second because Hims has a tendency to move when it
Yep.
does, and I want to get involved as aggressively as I can. So when you're looking at that from just a pure price action perspective, we have an emerging bullish uptrend against the backdrop of neutrality. You have an emerging bullish uptrend. You have a first increase in resistance. You have the first increase in support. The increase in support is a hypothetical. We got to see the ultimate conclusion of that pivot there, but it looks pretty decent right there, Frankie. Now, what I really like about it is the intraday side of the equation. I'd like go or don't setups here, Frankie, when you're sitting at a support level and you don't have an opinion if it breaks that support level. You break 49 here, Frankie, I don't have an opinion. I just want to get out. I want to take my punch in the face and I just want to get out because I don't have the same opinion in the retracement as you give up the 50, as you give up the 9 and
Right.
you start you have to fight those things. Like this is a good level to bank on. That's why I'm talking about it. You look at the hourly chart here, Frankie. The last 2 days after that, pretty aggressive shot across the brow yesterday. Consolidation on the intraday side of the equation, really between kind of that 49.15 area and really clean right around that 51. And so I like an entry above 51 using your whatever your ATR rule of choice is. I like using that above that 51 with a stop loss underneath 49. From a targeting perspective, I think you're targeting two things. You got to target the previous pivot in a retracement. You don't have to target the previous pivot in a flag. This is not a flag. There's too much volatility and it gave up a
Yep.
little bit too much for it to be a flag. But a standardized retracement, you gotta target that pivot point. That's right at the 56 level. And so I think 56, 55, kind of in that first target range. And then second target is you got quite a bit of double top action right around the 65 level. And if it works out, Frankie, I wouldn't be surprised we get some momentum here, but that's kind of this trade setup as you're going into it. What's your thoughts on him?
Yeah, I love it, and I love the risk to reward because you're roughly 2 to 1 up to that swing high,
Yeah,
right?
with
So
everything else is cherry on
little
top.
trade, and then a gigantic window, whether it gets all the way to the top because there's just nothing there, right? Lots of room to roll. So anything beyond that, icing on the cake. I love it. One thing I will note is, you got the conservative, you got the aggressive entry. You know what you also have? You have the let's take a bite, right? Let's maybe partial position over today's high, bar by bar it. It's Hims. It can go crazy. If it goes crazy, at least I got half a trade. I'd love to complain about
Yeah.
that. If it gets
Well,
crazy the other way, it's a loss, and then can add into it on the pivot candle if it forms.
Mark says, did not expect hymns. I doubt, I don't think you did, probably. But the last, we've had some really good trades in Trade Masters over the last few weeks, and I felt like let's let's go aggressive. Let's push it a little bit here.
I
And
like it.
also, you don't get a lot of clean technical shots on hymns. You
No,
just don't.
it's just a volatile.
You don't.
It's a volatile name that yeah,
And
you
again, I
get
want
the.
to be clear, not for the faint of heart. Like this is a big boy trade.
It's a big boy trade, but good risk to reward. Great
You
covered
can
call
make it a
stock
small
too.
boy trade if you just did a share just to test, but you
Listen,
get my point.
yeah, yep,
All right.
exactly. Not for the
What's your
faint of heart.
aggressive
Love
one
it.
here?
I like I like hymns, but I gotta say I like BitDeer better. BTDR. The miners have been on.
BTDR, right?
Yep, BTDR. The miners have been on. A
Fire.
They've been on fire, right? I mean, Mara. I mean, Hut. I mean, goodness gracious, Hut is just
I
like
think Mara is still actionable right now, too.
still. Oh yeah, Mara is still there. And BitDeer kind of fits into that as well. What I like about BitDeer specifically is you're just coming out of a breakout here on BitDeer, breaking through those highs from back in May, just a couple of days ago. Those aren't just highs from back in May, though. In the early days of BitDeer, I'm assuming it was a SPAC with its early performance, but I don't know that for sure.
Yeah, you can pretty much guarantee this bad boy was
Yeah,
SPAC.
looking at that, right? But
It looked SPAC like.
they had a once they kind of got through that, they really dialed in that level at around $15 as a pretty significant resistance level. Held them down, held them down, held it down, broke out, went crazy, held them down again here most recently back in May, finally breaking through that level. The beautiful thing about this chart and their history, though, is like there is no real levels of resistance. Maybe you could make a case for around $23 that pivot from back in January as something, but really it's the high, right? Closer to 27. So there is
That
we
weekly chart looks really good.
it looks really, really nice, right? We got a breakout coming out of everything into a gigantic window of really just you fought all the way through all of that 15-ish resistance level only to tap out the day after it breaks through. Maybe that's the way it plays out, but that's not what you would expect technically, right? I think there's a lot to like about this, and you're in one of the right now. We'll see how long it lasts, but right now, I mean, that's the Bitcoin miners have been one of the hottest, if not the hottest place in the market. And so we kind of have momentum in the chart. We have momentum in the industry. We have a gigantic window above us. Honestly, I wouldn't fault somebody for basically just targeting this to $27 for their second target and fill up that spot, because that's kind of what I
I
think
wouldn't blame anybody for putting a stop loss under 15 and saying let
yeah,
price
exactly.
appreciation
Let
rule
it
the day.
go. And I would call
I'll see you at the
23
top.
yeah, I'd call 23 a target. So I'd call 23 T1 and
I don't
27
think
or
you could have targeted the top with the swing trade, but I think you could on 23.
yeah. And I don't think it's crazy. I mean, momentum would have to continue, right? But BitDeer, like,
I don't think you should be too surprised by anything that happens on the
listen, the
target.
last time it broke 15, or that 15 level
look at
back
Hut.
in 24. I mean, yeah, go look at Hut, right? I remember talking in the lounge last week, and like, it's Hut expense. Now you go bar by bar that thing, and goodness gracious, hope you did.
Like the
Because
Bitcoin miners wanted to grow up
and they want to
eat
be,
at the
yeah,
big boy
and
table with the gold miners these days.
exactly. And listen, miners are friends, and who knows how long it lasts, right? But the reality is it doesn't have to last very long, right? I like your call out there. Get that stop loss under 15. That puts you underneath the breakout channel, under that big zone, under the 9 EMA. I wouldn't fault anybody for getting the stop to break even after relatively light move, right? Get the risk off, and then just letting it go till you have a reason to go. I would target them 23 by 27 personally, but there's a lot. It doesn't need to do that. I mean, 22 is a fine 2-to-1 trade as under that pretense, right? So lots of upside here. I love the look. I like the space, and if you are the type of trader that likes to have the 100 shares and sell covered calls on these aggressive things, which means, well, you get good premiums because they're aggressive things. This could be a candidate for that as well. if that is your cup of tea, very easy to get some good premiums on a bit deer for your covered calls if that's the route that you want to go. I just couldn't pass up the look here on bit deer. I had to bring them up tonight.
I think the weekly chart here is absolutely excellent. And Frankie, you and I have a really good track record this year specifically on mid-tier breakouts.
They've
And
been
that's
very good to
exactly
us. Yeah.
what this one is. It's a mid-tier breakout, multiple time frame. It's a Bitcoin miner, which means it's not going to be a smooth ride. Like, you're in for some bumpy,
It's not
some
mellow.
choppy roads there. But it is, but that's why you go out to the weekly chart to get the context to smooth out that daily volatility. And when you do, like, don't get me wrong, I like the daily chart too. Like, that's good momentum there. I'm just saying, like, if you want to
Yeah.
smooth that out, pull it out to the weekly, get that perspective. Like the weekly chart here is really, really, really good. Team, let's hear it. You got the Bit Deer Technologies with Coach Frank on the multiple time frame break and continuation. It's a momentum based trade on the breakout, or you got the go or don't setup aggressive off the first hypothetical increase in support
Yeah.
in
So two
HIMS.
different looks, right? Both pretty aggressive
Vastly two
names,
different,
but two
both
very, yeah,
equally aggressive, by the way.
both
Yeah, both
great. Yeah.
equally
Both
aggressive.
aggressive names, but
So,
different
Frankie, after
looks.
the totality of conversation in round one here, which one do you land?
I got to stick with Bit Deer.
Yeah.
I just do. I've been watching that 15 level for a long time, as the Delta Dogs know. We've talked about them before today. It just Hims has a ton of room too, so it can't be the only factor. I like that momentum's already established, maybe on Bit Deer. And again, I'm nitpicking here because I like Hims. I like them both, but I think I'll go with what already has the momentum
Yeah.
established and try to piggyback that than try to come into early. But I do like Hims, don't get me wrong, but I'll stick with Bit Deer.
And I'll stick with my pre as well. I like the momentum story here. It is a loss of momentum story, and you got to wait on confirmation. I think both. I really like that weekly chart on Bit Deer. If that's the only chart I was looking at, like I'm like that weekly
It's
chart
a
is
good
the
look.
best out of
Yeah.
every time frame that we have looked at so far here today. But if I still like the go or don't setup here. I just don't think you get a lot of good technical setups on Hims.
Yeah, you're right. You
And
don't,
and
right? You
and
don't.
it's a stock that can absolutely move. And so if you got a little bit of a go or don't setup in a trend and a hypothetical increase in support, don't get me wrong, I don't love the massive edge here. That's not what I'm talking about. I'm talking about a go or don't setup on an aggressive stock. What I love is if it works out, that's a big, big return. That's a
Yeah.
good
Yeah.
target. So I'm gonna have to go with Hims, but I would absolutely understand if anybody looks at the Bid Deer weekly chart is like, ooh, that one
So
looks
yeah,
good.
I gotta say that it's pretty, it looks like it's a little Hims heavy in the chat. It's closing in. I think Rolando's comment was the best. I already own some. I want it to go up. Talking your book. That's a good reason for the
Oh,
vote.
Rolando speaking book.
Speaking
Rolando
book.
speaking book.
Yep,
We see you. We
I
see you
can't
speaking
fault you
book,
for
and
that,
it's
sir.
you know
That is
I
a
have a
good reason.
tremendous amount of respect for Rolando for coming out and being like, I want to speak book here. I want to
Exactly.
get some more love here. I don't blame that at all.
Listen,
That's
not even for a
fantastic.
second. Great reason for a vote. So it
By the
looks like that
way,
one's pretty close.
can I tell you a minor I almost went with?
Yeah,
And the only reason I didn't is because I have a general overextension feel on GDX that I expect a little bit of development and pattern.
right.
Um, but I'm going to tell you right now, if this develops by next week, gold mining stocks will be aggressively discussed next week. Aggressively discussed, in my opinion.
Yes.
But the one that stands out, like, and we've talked about Newmont mining before, but Newmont looks good.
It's a really good look up
Yeah,
there. Yeah,
Newmont looks
it's
good.
a really good look.
I just want to see further development because I don't love it when you like a stock, but you don't like. Let me put it like this: I don't like it when you like the stock breaking out, but you think the space is going to pull back. Like
Yeah, like something's not
I
like,
want to
yeah,
see
you
that
want to line
play out
those
a
up,
little
right?
bit.
Yeah, you want to line those up a little bit.
Yeah,
But
exactly.
definitely don't forget, we might not be looking specifically at any gold miners today, but good chance
No, they're
we get
still they're still in
development
our
before
minds
next
though.
week's Trade Masters on
That's
them. Don't
right.
forget about
That's right. That's right.
those characters.
Well, it
That
just
that's a
reminds me
close one.
like this one here, Frankie.
Yep.
2 week consolidation break. 1 week consolidation. Maybe we do it completely just to give us another week of consolidation. What GDX pulls back. Newmont's on the list next week,
Well,
baby.
and I got a shout out. I can't remember who it was, but during that little stretch, we were in the lounge, and somebody brought up Newmont, so we went in and looked at some spreads, and I wish I owe them a thank you, but I can't remember who brought it up. But that's the beautiful thing about the lounge. You get to steal ideas from
There's a lot of good ideas
other
in the
traders.
lounge
Yeah, a lot
sometimes.
of good ideas. That would
A lot
was
of good
definitely
ideas.
a good run here. Love it. We'll
God,
close.
I agree
That's
with that. So many miners are setting up. That's why I'm like, I don't think it's a conversation for this week, although it could be. There could be some miners on the traders report. I wouldn't be
Oh yeah.
surprised if we see
I
a
wouldn't be
miner or two
surprised.
on the traders
I'd
report.
almost, yeah. I'd probably be more surprised if we didn't, if I had to guess. But we'll
It,
talk about that on Friday. We'll see
listen,
what it
even
looks
if we
like.
expect further development, we're just going to say we expect further
If
development.
Newmont looks like this on Friday,
It's
I
on the
promise
list.
you that I'm advocating
It's
it for
on the
being on the
list.
list.
Yeah.
So,
I just want to
so
say publicly, welcome to Wall Street. Accepting the gold miners as part of the big boy table. It's really fantastic to finally see Wall
it's,
Street chase the gold miners. That's been
yeah,
very,
welcome
very,
to the
very
party,
good to see.
pal.
I
Yeah,
love when the hedge funds has to have to chase us. I love when Wall Street has to chase us. That's fantastic. Love it.
love it.
Round two here, Frankie.
Round two. Well, it was pretty close. I don't think you can call a winner in round one. There was it was
The
very
team, the
close.
team, the team's the winner. The
Yeah, I
team.
think
There you go.
I
There you
think
go.
that is fair. Well, let's get to round two here.
All
I'll
right,
kick
Frankie.
off round two. You said you
We'll
like a
call we'll
good.
call round one a slight tie.
We'll call it a tie.
We'll call it a
We'll
slight
call
tie.
it, we all
Round
win.
two determines the winner chicken dinner.
There you go. There you go. Well, I'm going to make it tough on you, bro, because I'm going to throw another mid-tier breakout at you. This time
Mhm.
in Qualcomm. Qualcomm looks great.
This is cheating.
It is. It is cheating. But listen, somebody I know called shotgun, and that somebody wasn't you. So here we are.
That's because
Here,
I forgot to call shotgun in the lounge. I didn't know you had to call shotgun 5 hours before we were going to talk in Trade
listen,
Masters.
you learn something new
I
every
didn't
day,
know
bro.
that.
You
I
learn
didn't know
something
that.
new every day. There is no limit on how early you can call dibs. Right? You can
That's
call
not true.
dibs.
You got to be walking out the door to call shotgun. Team, I need a tiebreaker on this one. To call shotgun officially, do you officially have to be going to the vehicle?
You might have to.
Well,
I
anyway,
don't.
you got it. You got it. Let's hear what you like about Qualcomm here, Frankie.
All right. Well, Qualcomm looking really, really nice. And if you start with the weekly, that kind of tells the tale, right? And as you know, the team knows, but anybody who's maybe catching us on Trademaster for the first or second time, you know, Matt and I both anchor a lot to this multiple time frame, and that's exactly what we're seeing here on Qualcomm. It's broken through its trend. It's broken through its 50 weekly, and now it is kind of in cleanup mode. And it's got a lot. I mean, it wasn't that long ago. Not that I'm saying that we're going to target it to the 230, but it was only a year or so ago where that's where they were, right? So they've been up there before. So there's a lot of room. And again, that's always something I'm thinking about is room to run. And maybe that's not my target, but I like when I have room to run. I think Qualcomm offers that for us here. Still early in the breakout, relative strength in technology. Didn't exactly light the world on fire here as a sector. Definitely relative strength here on Qualcomm. I think anything over today's high is good enough for me. You have a very, very clean path into the 180 zone, and that might be the trade here on Qualcomm. At least from a swing perspective, they got some
You max out
history.
at 180 as a swing trade. You're happy.
Yes, you're
You're happy.
very, very happy
Yep.
with that. You can maybe, I think you can kind of dealer's choice, or as I like to say, T1 is negotiable,
Mhm.
right? I would just basically go with what you need. Typically, what I need is 1-to-1, but I think that's the real target here on these guys. A lot of strategies play on this, but I actually like an October 170, 180 spread. That thing's
Full
going right
call.
around, yeah, bull call.
Yep.
It's going right around the 260 range right now. Probably a little bit more than that if we take out today's high and get confirmation, but not gonna be too much above that. You can even throw a stop loss underneath, that, the 9 EMA, the low from yesterday, and about half of the spread would be at risk there, I would guess. So you can get a really good risk to reward situation on that particular spread, in my opinion here. However, it really is the direction first, right? If someone said, I'm just going to play some shares, or I want to pop a call, or,
Mhm.
I'm satisfied with the credit I get, I think, there is a little dealer's choice. But specifically for me, I do think the October 170, 180, as long as you don't end up, anything crazy happens tomorrow, we have to end up paying too much more than the 260 or so, 270 or so. I think that's the way I like this guy here. But I just really like the story as a whole. I love me a mid-tier breakout. I look at this chart. I'm a simple guy. I'm like, well, there's really no reason why it doesn't get up into that 180 range. And then, yeah, it's going to have to do some battling. And, that's the story of any reversal, right? Yeah.
Mhm.
But I'll happily have that debate if and when we get there, that 170, 180. Well, that's the top of that spread. If I want to, stick around, I can just roll that spread into something else. So give me the breakout here. I do think you want a stop loss or an exit plan kind of underneath the 9 EMA. I don't think you want to be any tighter than that. You want to let that old breakout level, the price action, today's low, yesterday's low, the 9 EMA. You want to have a little bit of glue to hold this together against a bit of volatility, but it's not bit deer, right? It's not historically as crazy and volatile as bit deer. I really like Qualcomm here.
No, it's the semiconductors, definitely not the crypto miners there. No, no doubt about that, Frankie. And when I look at kind of the space in general, there's some high quality stocks that are doing some great things in the
Yeah.
semiconductor space. Qualcomm's one of the cleanest right this very second, I would
Yeah.
say.
Very clean right now.
And so I just wanted to add that. And after the Nvidia news yesterday, or earlier today, where they're not selling chips to China, um, I want to remind everybody that Nvidia was not planning on selling chips to China. They took it completely out of their guidance, so the market might need to be aware of that here today. But Qualcomm didn't budge. Like, who cares about that?
Yeah. No, it
And
held that
and
breakout like a champ.
honestly, if that same news story would have came out 3 4 weeks ago, every semiconductor would have budged. And so you're
Yeah.
seeing the environment change a little bit there. I really like this potential break. Well, I shouldn't even say potential break. It already confirmed on the break. We're just looking for
Yeah.
continuation,
Just continuation.
some
Yeah.
continuation there. Looks pretty good. Well, Frankie, I'm certainly not mid tier here. I'm low tier. I'm coming reversal on you.
I know where
And
you're going. This is a good
one of
one.
the most pure reversals that is playing out in the market right now is Enphase. And Enphase, we've had a history with Enphase multiple different times, Frankie, over the
Yeah.
years. We've rode it on the top side, we hated it on the
Oh
downside.
yeah.
And
Yeah.
it kind of feels like it is starting to get to the point where the hate has went a little too far, right? The hate has just went a little too far. And what I mean by that is the technical momentum. You're seeing that momentum. Look at this consistent story on the downside, very consistent on the downside until right here. And now you're seeing that shift a little bit here. So, first and foremost, when you look at the weekly chart here, you got a real good story to be told on the momentum side of it. And now you're, because of the short term consolidation that Enphase has been going through, you're now had that 20 weekly, which has been a just a problem child for
It's been a
any time
problem.
end
Yeah.
phase tried to get giddy up. They just got smacked right back down. They tried to get on that horse right here, and guess what? Horse didn't like them. Horse didn't
Not
like them.
today.
Horse didn't
Not
like.
today.
Just knock him down. Knock him down. Not today. Not tomorrow. Type thing. Well, you're not seeing that. For the first time, you actually this week punched up above that 20 weekly. That's a positive sign. You're also got a heck of a pinch going on between the 9
Oh
and
my
the
goodness. Yeah,
20 on
that's
the
real
weekly
pinchy.
chart going on. And the 9 saying, I don't want to budge. And the 20 is like, I don't want to budge. So what do we need to see? We need to see the 20 get budged. We need to
Yep.
see the market to get above that 20 period moving average. So I just wanted to start on the weekly chart because the weekly chart looks really good. The daily chart is what you're going to obviously be processing here. And you look at $40 here, that's kind of the level of resistance that you're currently anchoring against on end phase, is that $40 resistance level. You come back out to the weekly chart, and where's the 20 period moving average at this point because of that 4 week consolidation at 39.79. What does that tell us? It tells us the 40 levels clean. Now, in Master Trader this week, every single time I teach Master Trader, I always get asked the question, wick v body, right? Wick v body. Do you care about the wick? Do you care about the wick? Do you care about the wick? And I'm also I always answer the same way. You got to let the technical story tell you, right? There's not a one answer, one size fits all type scenario
Yep.
here. Does that one wick above that 40 handle, is that one data point, does it matter or not? Well, on the daily chart, you can't tell. You have to go into the intraday chart. Well, it's a 30-minute one data point. Let's go check the 1 minute chart. This was all Fed induced volatility here. 40 is the number here, Frankie.
Yep.
And so when I'm looking at the level, you get above 40 here, you close above 40, you're closing above the 20 weekly on the 20 period moving average on the weekly chart. That looks pretty good. I do think you can go aggressive just above the high of today. Like, I do think you could just say, all right, if you get above the high of the day, fantastic. Let's just giddy up and go. If you wait on the close above 40, then you would ever just look at whatever the intraday level of resistance or the wick above that closing candle is. So the aggressive trader would be in above 40 or in above the wick. The conservative trader would simply wait on a close above 40 and then trigger above the high of that day. That is the closing candle above 40. Stop loss placement, I do think you got to give this one a little bit more room. The go or don't setup on HIMS was because if it violated support, you didn't want to be in that trade
You
at
just were
all.
done. Yeah.
You don't have another support level to anchor against. Here, I think you're in a reversal with the pinch on the weekly. I think you got to give it a little bit more room there, Frankie. And what I would suggest is really kind of working with this pivot point right here around the 37 level. And so you're going to be taking on about $3.5, $4 of risk here based on where your entry is going to be versus where your stop loss is going to be. So where's that ultimate target here? I think the entry's pretty self-explanatory, quite frankly. I think the stop loss is debatable. You can go aggressive underneath the low of today using the 9. You can go conservative to get underneath the pivot action. But on a targeting perspective here, Frankie, I think this is actually fairly simple. You just don't have a lot of anything until you start working into about 40, 47, 48 here, Frankie.
Yep.
There's just not a lot there. You're entering into a pocket on the weekly chart. You got some high base pivots here. You got a pivot here, but you really don't start work until you start working to that support level here, and then you see kind of the chop until you get into this area. So targeting wise, I think you're targeting 40, 47, 48 in that ballpark. There's a zone right there. And then I would think it opens up a little bit into the 200-day moving average, right on that green line around that 51.81, which will come down a little bit as well. It's more about the entry and the stop loss being really, really, really clean than the targeting being necessarily clean. But I just really like the reversal here. I think it's one of the better reversals in the market. It's the one reversal. We're not dealing with a lot of reversals when the market's at an all-time high. Okay, we're not dealing
Yeah.
with a lot of reversals when we're dancing all-time high numbers. But out of the few reversals I was looking at, this one did stand out to me. And so end phase is my second pick. My first pick obviously was the aggressive go we're doing on him. So we'll see if that gets confirmed tomorrow. And then obviously both of my picks need confirmation, obviously, but I like them both. What's your thoughts here on end
Yeah,
phase
I like
versus?
your end phase, and I think your targets are a little cleaner than maybe you think. You got that level at 47, 48, but that's also where the 9 monthly is, right? That's
Yeah,
always
that's
something I'm
true.
paying attention. And then the clear path into the 200-day moving average. I think this is, fairly clean from that point of view. Just kind of thinking, fill
Yeah, it's
one
right there.
challenge, work to
49
the
is
next
right
one.
there.
Yeah,
Yeah.
so you're kind of right in that same level. So I
I'm
think the
microanalyzing this level here and this level here. But these levels here were the 50 period moving average. They weren't had anything to do with the price really.
yeah, they
So I
wouldn't they
like your
wouldn't
I
keep
liked
doing
your
that.
thought there. I think that 49.50 level is kind of that real target. You get there, I think you're pretty good.
No, I think you're pretty happy. Yeah, I think this is, I would agree with you. It is
All
one
right,
of the cleaner
so
reversals in the
are you
market.
sticking with Qualcomm or are you going to Enphase? Did I get you? Let's
Nah,
let's do that number.
I don't
It's
think
close. I
you,
like them both.
I do like them both.
Mhm.
But I think I just kind of like the overall story with Colgan just because it's a little bit ahead of them, but it's still in that, not upper tier, right? We were talking about, Take Two as a potential watch list candidate before we went live. It's a beautiful all-time high breakout. It's super clean chart. Well, both Qualcomm and Enphase aren't that, right? As far as all-time high breaks, but they're both in these various breakout points. I kind of like the Qualcomm's in the middle. So if I had to pick one, I like that Qualcomm's kind of already got the story going a little bit, but there's still room and
Oh, they've
lots
already
of it.
broken out. I mean, Trigger's
So
just above the high.
yeah, I think I got to stick with the Qualcomm. Although I do agree with you that Enphase is one of the cleaner reversals that you're going to find in the market. This time consolidation that we've seen at that 20 weekly. I mean, I think you
Yeah,
kind of
been good.
undersold because this thing got slammed to the 20 weekly forever, it seems like. And it
Months,
not
months.
doing it.
Yeah.
And it's now had, several weeks battling that and it's just, nope, not this time. This time's different. This time's different. That's what they're saying, right? It's got to break through it. But
Yeah.
that's definitely a noticeable change in character because
Well,
usually it was like, oh, is the 20, get the heck out of here
yeah.
and run for the hills as fast as you can. I think it's a very compelling reversal, but I think I'll stick with Qualcomm
And for
personally.
me, I'll just make mine simple here. I like them both quite a bit. If you like a reversal, you like end phase, you like a mid-tier breakout, you like
Yeah,
like
yep,
I like
yeah,
them both
pretty
quite a
simple.
bit.
Yeah, it really is.
I'm not going to discriminate against a good reversal or a good mid-tier breakout. Lab, everybody can afford one if you know how to trade options. Period. End of
Absolutely,
sentence.
absolutely.
Because if you don't know the cheapie, well, why don't you come over to Tackle Trading? We'll do those cheapies together, brother.
Oh, we'll find some cheapy things.
But I'll go with Qualcomm. Like I would officially, they're both really close for me, but I'm a fan of that Qualcomm
Yeah,
analysis.
it's a nice little as who said it? Somebody said nice little 4 pack. It was Mark that said that. Yeah, I
Yeah,
think
thanks,
so. I
Chucky.
think all of these deserve consideration for a watch list. So I think I'm satisfied
Well,
with all 4 of them.
final thoughts here, Frankie.
As always, thank you for joining us. And those of you who catch the recording later, thank you for watching. Always helpful if you do hit the like button, sub if you're not yet subbed, share it with a friend, all of that fun stuff here. It's going to be an interesting little stretch. Get this Fed behind us. We got a fairly clear path as far as we get, I think, Maddie, these days into the upcoming earnings season, which, gosh, that's only a month from now. I don't want to think about that. Nice to see that volatility dialing in post Fed. Not surprised to see it happen on the Fed. Interesting situation. As I did last week, I will throw my free list in the new traders channel over on the Tackle Trading Discord, which if you're already a member of Team Tackle, you know exactly where to find it. If you're not, there will be a link to Discord in the description so you can get my scan, my Wednesday scan for Canada. It's not just for Trade Masters, but for Thursday. So I'll throw that in here when we're done. But as always, thank you, team, for joining us. Pleasure talking shop with you. We'll see the pros tomorrow in the lounge. And with that said, Maddie, I'll shut up and give you the final work, my friend.
Just if you love Trade Masters, hit the like and share. And if you love tackle trading and you're ready to become a pro member of the tackle trading community and enjoy all things known as, we do the lounge, we do the coaches show, we do mastermind groups, we do cash flow clubs, we put out the newsletter, we do the traders report, we do Master Trader. We do a lot with our pro members on a day in, day out, week in, week out basis. And if you want to be a member of that amazing community, no better time than now to hit that free trial in the description below. And with that said, I hope everybody has a wonderful, wonderful day. It's good to see the volatility get cleaned up post Fed. And that's not too surprising to me, Frankie. The overnight session is usually a cleaner session than the actual intraday session during Fed day. And the market so far after the reopen on the futures, there hasn't been a green candle yet on the 5-minute chart. The market's starting to come back in and start dialing it in. That looks pretty good. So with that said, everybody have a wonderful, wonderful rest of your evening and tell somebody about Trade Masters.
Absolutely. Thank you, team.